Hi everyone, it's Peter Schiff. It is Saturday, July 24th, 2010. Well, another week and another decline for the value of the dollar. This is the sixth weekly decline in the dollar. Dollar index settled Friday just around 82.5. We got stronger than expected economic data, both out of the Eurozone and out of the UK. And remember, these are the nations that have decided to adopt the austerity and the spending cuts, whereas the United States is continuing to follow the misguided path of the Keynesian stimulus. And so the countries that are going to be cutting back seem to be doing better than the United States. Also, Europe announced the results of their stress tests. Now, I don't know exactly how stressful these tests were. I remember when we did our own stress test, I kind of compared it to letting a bunch of gerbils run around on a suspension bridge and then claiming that the bridge passed the stress test. I have a feeling that there was somewhat more stress in these tests, but in any event, the results, I guess, were better than people expected. I think maybe fewer than 10% of the banks that were tested theoretically were at risk, and I think that's also causing stronger sentiment to return to the euro, and the negative sentiment is continue to build on the U.S. dollar. Again, it's a very quiet decline. There isn't a lot of attention being paid to it. My guess is that the dollar is going to be challenging its lows. The dollar index might have to drop down to 70 before we start really seeing some concerns expressed about a weak dollar. Speaking about a weak dollar, I did watch some more of Ben Bernanke's testimony the other day in the House. He testified in front of the Senate initially. And of course, it's the same old story. I thought, it was very interesting when Ron Paul got around to questioning Bernanke, and you can see that exchange up on YouTube. In fact, that's where I watched it. Unfortunately, Ben Bernanke was saved by the gavel. Ron Paul finally got a question out of his mouth when he was questioning him, but he spoke so long that Ben Bernanke did not have to answer it. But the question he tried to propose to Mr. Bernanke was, what will the Fed have to see before they admit that they're wrong? How much higher does unemployment have to go? How much weaker does the economy have to get before they question their underlying assumptions? You see, the problem is rates are too low, and we're never going to solve our problems with low rates. We need higher rates. We need savings. We're not going to get savings with 0% interest rates. We need less consumption and less borrowing and more investment in production. And Fed policy and congressional policy is inhibiting all that. Unfortunately, Ron Paul's question is going to be rhetorical for now because Ben Bernanke did not have to answer it. I was wondering just how he would have answered that question. Talking about repeating the same mistakes over and over again as a classic definition of insanity. General Motors announced on Friday that they would be spending $3.5 billion of our money, taxpayer money, to buy AmeriCredit. Now, AmeriCredit is a company that specializes in auto loans to people with poor credit. In other words, this is the subprime of the automobile market. Now, General Motors already used to operate GMAC, which they drove into bankruptcy and which is now owned by the American taxpayers, and it was bailed out. And why we would allow General Motors to take $3.5 billion of the bailout money and buy a company, AmeriCredit, that would probably go bankrupt eventually if left to its own. I think that it is in a terrible business, lending money to people who really shouldn't be buying cars in the first place. I think as this recession continues to unfold, I think more and more people are going to walk away from their car loans the same way they're now walking away from their mortgages. And, GM seems to be buying a ticket on the Titanic here just before it hits an iceberg. I guess the only reason they don't care is because it's not their money. I think what GM is trying to do is bring this captive lender within its company so that it can sell more cars. You see, it's trying to pad its earnings so that they can, I guess, do a public offering and sell some of the government shares back to the public. Hopefully, people are smart enough not to buy any GM stock, whatever price they bring it out at. But what they want to do is generate sales. But these sales are going to ultimately blow up in their faces because the people who are buying the cars are not going to pay back the money that AmeriCredit loans them. And that's what GM wants. They want to be able to increase their car sales. This is all short-term thinking. This is exactly what we don't want. A lot of politicians still claim credit that the bailouts saved the automobile industry. They didn't. They basically condemned it to die a slow death. Had we allowed GM and Chrysler to fail, they would have been restructured in a way that would be beneficial for the automobile industry. Today, we made sure that the needed reforms never happened. We actually just bailed out the labor unions, and we've made sure that our automobile industry will continue to deteriorate as a result of those bailouts. Another problem that I see coming is in the gold industry. I mentioned a few months ago when I was first brought to my attention what was going on at companies like Goldline that were, really, causing people who wanted to buy gold bullion to buy these overpriced, theoretically rare coins, European coins instead. And as a result, they were lining their own pockets at the expense of people who had, in good faith, been recommended to this company by a number of conservative talk show hosts who believe in gold and who recommended that they call Goldline, only to see them pressured into buying not gold, but antique coins with very little, if no, numismatic value. But people paid so much for these coins that they need the price of gold to double or triple just to break even, just to be able to sell their coins back for what they paid. I said that this was a problem, and just this week we learned now that there are investigations of Goldline going on in the state of California, investigations, and also now a congressional investigation. And it's my belief that they are going to find a lot of problems at Goldline. And unfortunately, they are going to use this as an excuse to increase regulation dramatically on all sorts of small gold dealers around the country that are not overcharging or ripping off their clients, that in fact are giving their clients a very good deal. And I think those good deals are going to go away because the government is going to dramatically increase the compliance costs associated with being a gold dealer. As a matter of fact, I found out this week that included in the health care bill was a small provision that is going to require gold and silver dealers, among other businesses, to report every single transaction made with the public that is $600 or higher with a 1099. That means anybody who buys even a half an ounce of gold through anybody or any a pawn shop, a small gold and silver dealer, that company is going to be filling out 1099s. Who knows what all this extra paperwork is going to cost? But of course, it is going to have to be pushed over to the consumers in the form of higher prices. And once they finish exposing the fraud, I believe, at Goldline, who knows? Maybe they are going to categorize gold now as an investment and allow the SEC or FINRA to regulate the sale of precious metals much the same way that they currently regulate the sale of securities. And operating a security firm, I can tell you that when that happens, the costs are going to go through the roof, and the ability of people to buy real gold and silver at relatively low markups is going to come to an end. The government is going to make sure that it's so expensive to be in this business that the costs are going to be much higher. And of course, what the government probably wants to do is drive a lot of these firms out of business, because the government doesn't want people buying gold in the first place. The government wants us in paper. And unfortunately, so many well-intentioned people who understand gold have unfortunately recommended that people use the wrong firm to buy it, and they have handed the government a major issue in this case, and it's going to really discredit these talk show hosts and what they're trying to accomplish with warning about the problems in government and the need to buy precious metals. For those of you who don't know, because of the problems that so many people had with companies that were overcharging or trying to pressure gold buyers into buying numismatic coins or phony numismatic coins that they don't need, I did open up my own precious metals company, Europac Metals, Euro Pacific Precious Metals. The website is europacmetals.com. So if you are interested in physical precious metals as a hedge against inflation and dollar debasement, give us a call, and we can help you. And we don't deal in numismatics at all. Anyway, thanks everybody, and enjoy the rest of your weekend.